Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 18th of May, comes to you from London, and quite a bit more red on the screen today. News in the UK that inflation has hit 9% this morning, and so that is just highlighting the headwinds that we're facing in global markets, and currencies taking their cue from that. We're seeing the euro sitting at 105 against that stronger dollar, and sterling sitting at 124, just holding a bit stronger this morning on the basis that interest rates will now have to go up much higher in the UK, and sitting at 118 against the euro. Looking at Bitcoin, we're down back below the $30,000 level. We've deactivated that upside target. We've fallen into long-term bearish territory. So for the moment, 25,000 is the key support level. That was the low that we hit, and that's the level we need to watch now. The S&P 500 index actually had a strong showing yesterday, bounced up 2%. But of course, what we are seeing going on here is the fact that we're hitting resistance that was support. And so whilst that was a big rise, it's not enough to change the picture that we are in bearish territory. And the same on the Nasdaq, with big downside targets still 25% lower. And the S&P futures today down a third of a percent. The Nasdaq E-mini down 0.4%. We're seeing that volatility as markets seesaw quite significantly in the high 20s. So the fear index is not as fearful as it has been, but still isn't great. Looking at the European markets, we're fairly flat this morning, slightly down in Germany. UK down on the FTSE future, talk of recession now almost inevitable. Looking at Japan, we're up 1% there, but other markets in Asia were mostly flat with no big changes. Oz, the big standout, up 1% as well. So Asia looking a little bit better as a result. We'll look at the energy mix in a minute. Wheat was down 2%. So we have pulled back a bit, but of course this pattern that we're seeing is really showing signs that we will go higher. That pullback has locked that column, so I'm 55% higher if we then activate that. So really big potential rises there. Gold sitting at 18.15, so pulling back here to support levels. Silver also just fairly flat, and looking at US 10-year yields, we are just nudging that 3% level again. Some of the tech majors had strong showings last night, but again, very similar patterns here. If we look at Apple, the range on Apple was 150 to 180. That was the previous support level, 150. We fell through that, and we've recovered to come and hit that back from below. So we've now got a downside target 28% lower if we activate that with a new low. So that's what we need to watch. Really quite interesting there. Looking at the energy mix now, Brent crude is actually up 1% this morning. We've got a mixed picture on the short targets, but on the long term, we've activated those bigger upside targets, that 148 level now activated, and we've got a new target of 184 if we move above 123. Look at our oil reports that we put out to clients. Remembering back in January, we gave a target of 150. We hit 140 soon after that. US nat gas just falling back a little bit, but that chart is looking very strong indeed. Looking at gasoline prices, diesel prices hitting record prices in the UK this morning, and we're looking at that chart looking much higher there as well, breaking to new highs on the above gasoline chart. Coal sitting at $250, just getting set to break that level for a breakout of that triangle. Pretty key. Emissions down 4% this morning. We've put a report out to clients first thing on that. And if we look at TTF, up slightly, MBP down slightly. We were neutral on MBP. We were still bearish on TTF, nudging those new lows. And German power down 2%, but this chart's still looking fairly stellar as well. That's it for today. Until tomorrow, happy charting. See you then.